Hey everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, welcome back to yet another exciting week, I guess, in crypto. There is lots going on, but I have quite a few tokens to talk about this week. So we will just jump right in. So first up, we're going to talk about Aztec. So Aztec is a layer 2 privacy-focused project. They are nearly 10 years old. They actually started in 2017, and they've since then raised over $100 million. I think it was $117 million. So Aztec, though, they, like I said, they've raised money. They've been kind of in stealth for a while. They finally launched their token this past week, but it was in pretty rough market conditions, unfortunately for them. So despite the launch, the token actually really, it's about trading at around half of what it did its sale at back in November of last year, which was at about a $400 million FDV. It's currently trading at about $193 million FDV, or a 0.018 token price. So like I said, the Aztec L2, its big promise is it's got a lot of privacy features, and it has launched its mainnet back in November. But since then, it's only attracted $7.3 million in TVL. Like I mentioned, though, the token has actually held up pretty well since launch, despite this launch at a lower valuation. It's up 7.2% for the week. All right, next we're going to talk about Lighter. They're the perpetual futures exchange. You may have remembered I talked about them a couple weeks ago. They're a big competitor to Hyperliquid. They actually announced this past week that they've struck a deal with Circle, the big stablecoin issuer, for a revenue sharing agreement. The partnership is designed to basically share the interest income generated from USDC, which is Circle's stablecoin. And the idea is that any USDC that is on the Lighter platform can share in the profits that would be generated from that amount. So a good way to kind of encourage Lighter to keep USDC as their primary stablecoin, and to kind of increase the holdings of USDC on their platform. So this is great for Lighter because they actually don't charge trading fees. They just charge subscription fees for premium trading features. So really, they're not going to be having the types of volume growth in line with their, not going to have revenue growth in line with their volume growth the same way you would see on like Hyperliquid and other more traditionally stacked perpetual futures exchange. As I mentioned, though, Lighter's been definitely giving Hyperliquid a bit of a run for its money. It has garnered a ton of open interest, and the protocol actually currently earns about $81 million in annualized fees just based on the last 30 days of data. So this is only helping it, although no details on what the revenue share agreement looks like is available right now. Lighter is up 9.5% on this news. Okay, next up, we're going to talk about Aave. These guys have just been on such a crazy roller coaster to date. So last week, Aave Labs, which is the entity supporting the development of the lend borrow protocol Aave, which is one of the large DeFi protocols, posted a proposal to direct 100% of Aave's revenue to the DAO. So over the past few months, there's been a lot of different disagreements between the Aave DAO and Aave Labs about where revenue from the front end product is basically going to go. The proposal from Aave Labs seeks to unify the Aave protocol underneath it, which sounds amazing on its surface. We want to see that. If you remember, there was a debate in the forum because the Aave Labs team tried to remove from their front end to themselves versus the DAO. Even though it wasn't a significant amount of money, it really started this discussion around, is Aave as decentralized as it should be? Aave DAO tried to kind of transfer the brand assets from the Labs entity to the DAO. That did not happen. So there's been a lot of back and forth. So unfortunately with this, though, the proposal did get a lot of criticism, though, because they requested a huge budget of $50 million in cash and tokens, which is just way more than other DAO service providers have been paid to date on the Aave protocol. So the proposal is still up for debate, and it does include provisions for launching and unifying around this V4 upgrade, which they're expecting in the coming months. But there's been, like I said, a lot of opinions on how they should go about this, how the revenue should be split, how much money Aave Labs should have versus the DAO. And so we'll have to kind of see how this continues to unfold. Aave is up 17% though on this news. It was up more last week before the sell-off. The community definitely was excited to see these changes coming. Okay, last up, we're going to talk about Morpho. Morpho is another lend borrow protocol, but they have a different architecture versus Aave. So Morpho just yesterday received, there was an announcement from Apollo Global Management that they've entered into a deal to actually buy up to 9% of the Morpho token supply over the next 4 years. So like I mentioned, Morpho is one of the largest on-chain credit markets. They've got about $5.8 billion in TVL, and they currently support yield strategies for a large number of institutions, many of which are not crypto native, which has kind of been the appeal for it. They essentially allow managers to come on and create their own like credit strategies on chain. And so they've gotten a ton of interest on the institutional side versus retail side for that product. So Apollo said they're also working with Morpho to support lending markets on the Ladders protocol. Notable here, though, about the token of Morpho is that Morpho token is very strictly just a governance token over the Morpho protocol, because Morpho actually doesn't collect any fees or revenue that's like redirected to the DAO or a third party. It is 100% goes to lend borrowers. If you look at any of their revenue figures, it is essentially zero. So very interesting that Apollo chose to purchase this token because basically all it gives them is governance rights. So it feels more like this is a strategic alignment than it is like an actual investment in the protocol and its future. Like I said, though, Morpho is still super successful, and this just really helps strengthen its cement its its place with these institutional players. The deal does follow last week's announcement that BlackRock purchased Uniswap's tokens, as it also makes their shares of the tokenized Buildle fund tradable on the Uniswap DEX. Again, all really interesting to see as TradFi gets deeper and deeper into our space. Morpho up 32% this week. All right, guys, I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.